Our next presenter is Duncan Craib, Managing Director and CEO of Boss Energy. Duncan is the Managing Director and CEO of Boss Energy, having joined in 2017. Chartered accountant with extensive mining sector experience, he has held senior roles across Australia, the UK, Namibia and China, with a focus on uranium since 2007. Before joining Boss, Mr. Craib was Finance Director at Swakab Uranium, where he was instrumental in the $2.5 billion acquisition and $2.8 billion development of the Husab mine in Namibia. His expertise spans finance, mine development, uranium trading and corporate governance. Thanks, Don.
Thanks, Andrew. Thanks to the commitment and hard work of our team, we've just beaten our first year of production and cost guidance, and then a few weeks ago hit over 1 million pounds of uranium production in that first year. Honeymoon's margins are strong, our balance sheet is robust, and we are well positioned to capitalise on the inevitable upturn of the uranium market, which we believe as demand rises on the back of the nuclear power resurgence. With production on track to ramp up significantly during this current year, we see the financial strengths of Honeymoon come to the fore and cash flow set to increase substantially. In parallel with the ongoing ramp up, we are driving our exploration program forward with the aim of creating new resources. This will see an updated resource estimate for our satellite deposits, Gould's Dam and Jason's, in the coming quarter, and also work to be done on progressing greenfield targets. But before I get into the detail, it's worth keeping in mind what an amazing opportunity Australia has to pursue uranium mining. Despite Australia's tremendous potential, there are only 3 operating uranium mines in Australia: BHP's Olympic Dam, Heathgate's 4 Mile operation, and in the past year, Boss Energy's Honeymoon uranium mine. Sorry, that's jumping ahead for some reason. Honeymoon became South Australia's 3rd operating uranium mine, and for that matter, Australia's newest uranium producer in the past decade, one of the first to re-enter the global market, and with that, take first mover advantage. With its political and economic stability, Australia has a once-in-a-generation opportunity to contribute in achieving net zero and capitalise on the inevitable surge of global uranium demand that will accompany it. And Australia's untapped uranium resource opportunity is immense. About 1.7 million tonnes is estimated in our country, with extensive reserves in Northern Territory, Queensland, Western Australia and South Australia. In fact, Australia holds 1/3 of the world's uranium reserves, but as a producer, we only supply 7% of the global uranium demand. So to put that into context, we as a country with only 3 mines operating in South Australia export enough uranium to provide 67% of Australia's national electricity market with zero carbon emission nuclear power. Think about it, and what an amazing opportunity we have that we're not capitalising on. On a world scale, recent industry events reflects what could be a positive turning point, demonstrated by several positive catalysts. The uranium market has seen renewed strength since April, driven by rising government support, expanding nuclear programs, and resurgent financial interest. Globally, demand is rising as nuclear energy programs gain policy momentum. China began construction on 6 new reactors. India is accelerating approvals for 21 units. And Japan extended reactor lifespans above 60 years, following what the USA is doing with their expanding fleet. As Chris highlighted this morning, SMRs are also gaining traction, with Canada investing in early deployment. The term price indicators could be more reactive positively in the coming months. And there's Boss Energy, and this is why we entered production, why we started up last year. Over the past decade, Boss Energy has evolved from a small startup into becoming an international multi-mine in situ recovery or ISR producer in the 2 Tier 1 locations of South Australia and South Texas. As mentioned, we've just produced our 1 millionth drum of pounds of uranium. We've banked nearly $100 million in our first year of operation. Our ramp-up's going to plan with 1.6 million pounds estimated for production this current year. Our interest in Alta Mesa is managed by Encore Energy. We have a 30% interest in which we get 30% of their produced uranium. Already they've delivered 100,000 pounds to Boss Energy, which is unencumbered and we can sell into our own sales mix. That 30% joint venture investment into Encore Energy's managed Alta Mesa mine in South Texas was our first foray into mergers and acquisitions. We're truly focused on value-accretive opportunities as we look to take advantage of getting a foothold into the USA uranium industry, which helps power 17% of that global superpower's energy needs. We look forward to continue working closely with the Encore Energy team and helping ramp up Alta Mesa, which is really growing strength to strength, quarter by quarter, with recent management changes and a recent new direction seeing benefits flow through. As a company, our key focus remains on seeing Honeymoon go through successfully its ramp up and increase its production profile. But in addition to that, and in addition to our Alta Mesa investment, we've also looked at increasing and growing our pipeline of other opportunities within the global uranium industry. And that's principally highlighted by Boss Energy recently increasing our investment into Laramide resources up to 19.9%. Wonderful to get a foothold on that asset, Westmoreland in Queensland, which has just received a mineral development licence, which is a hugely positive milestone as we firmly believe Queensland will inevitably open up to uranium mining. But in addition to that, as mentioned, we're focusing on our satellite deposits in South Australia, Gould's Dam and Jason's, looking to bring those into production. We're also drilling around the uranium mine with Lake Constance and other exciting sort of greenfield exploration targets. In the Northern Territory, we've got an earn-in arrangement with Eclipse Mining for their Liverpool project, and that project itself was held by Cameco back in 2004 to 2006. Laramide's not just Westmoreland, it's also got projects in Utah, in South Texas, and further afield in Kazakhstan. So wonderful growth opportunities to look forward to. But let's get to the main part, which brings me to Honeymoon. What a journey it's been. I mean, these uranium mines take a long time to develop, and it's something the market often missed. For Honeymoon itself, it's taken nearly 50 years to get from the initial drilling discoveries in the 1970s to get to commercial production of where we are today. In the 1970s, it started drilling, and there you can see Dave Brunt in his red trousers and flares at the bottom with a backyard swimming pool, testing out ion exchange and how that works. And Dave's still with us consulting, but really this just shows what the trajectory has been for this project. It took time, but we got there, and it now is a commercial success. When we look at the development milestones that we've achieved over the past decades, there have been a number of them as we've advanced this project. In December 15, having acquired the Honeymoon mine, January 20, it was followed by our first feasibility study. In the following year, in June 21, we did an enhanced feasibility study introducing ion exchange as our main method of production, which really enabled us to increase our production output and lower our cost of actual operations. In June 22, we then made the final investment decision, followed by April 2 years ago, in April 24, we restarted production, and in January of this year, we declared our commercial production, and with that provided our first guidance. By April this year, we were generating free cash flow positive, and only a month ago, or in June, Honeymoon exceeded that first year production guidance of £850,000. As highlighted, Honeymoon exceeded that FY25 production and cost guidance with 873,000 uranium produced and second half C1 cash costs of $23 per pound. Our operating NIM6 columns are performing in line with design, and our initial wellfields 1 to 3 are all operating at flow capacity. Or operating at main capacity. And here we can see the columns being constructed. These are columns 4 to 6, going from left to right. Column 4 has just done its hydro testing, getting ready to be brought online. Column 5 and 6 are now practically being completed, getting ready for its hydro testing so that they can be brought into production. And their commissioning is likely to take place over these coming quarters of this current calendar year. When we look at our well fields, we're also expanding, and here you can see the outline, the square box of our mining licence, within which sits the ore body, which is really broken down into 3 domains. On the left, you can see Brooks Dam, the centre, the Honeymoon domain, and then the East Kalkaroo. The Honeymoon domain is where the processing plant sits, and those well fields sitting adjacent to that are where we started production. We're now looking further afield and bringing in our sort of satellite deposits from well fields 6 to 9. Our C1, last week we released our FY26 guidance, which represented our second year of Honeymoon's ramp up. Production guidance is £1.6 million, which is consistent with what was set out in the 2021 feasibility study. Our C1 cash cost is $41 to $45 per pound, which represents a $4 per pound increase on those C1 costs, which is primarily attributed to an expected decline in grade as we move into these outer areas of the resource. This was understood in our feasibility study, and our team on site are pursuing several initiatives to optimise the lixiviant, to leach the uranium and deliver value through improved recoveries. Sustaining capex for the years is forecast to be $29 to $32 million, which reflects the capital to build 4 to 5 well fields and bring the total number of well fields in operation to 9, which is required to deliver our current year FY26 production guidance of that £1.6 million. But in addition, it supports another £900,000 for the following FY27 year, which we will expand upon. But as it's noted in our quarterly announcement, results from the initial drilling for wellfield 6 to 9 has shown less continuity of mineralisation as was assumed in the feasibility study, which potentially means that we have additional injection and extraction wells which are required, which results in an increase in sustaining capex per pound. So as a company, our primary focus is to now assess the potential challenges this poses and what optimisational techniques we can apply to ensure Honeymoon's positive start to production continues for years to come. In a combined approach, we've harnessed our own skilled team on the ground with external subject matter experts to proactively work on such matters. I can't shed any more light on that now because that's why we're doing the review, but we'll keep the market informed as the results come to hand and tackle these challenges as we have to get to this point after the past 10 years. In parallel to the Honeymoon mine ramping up, we are also proactively exploring and proving up those satellite deposits of Gould's Dam and Jason's. Jason sits about 15 kilometres north of our Honeymoon mine, and the Gould's Dam sits about 80 kilometres northwest to the Honeymoon mine. We have the potential to drive growth as well as enable us to leverage off our existing infrastructure and further capitalise on the opportunity presented by that growing global demand for uranium in Tier 1 locations. As mentioned, the results of our mineral resource estimate upgrade for these satellite deposits will be provided to the market in the coming quarter. And at the end of this quarter, I'll be handing over the reins to the CEO to Matt Ducey, who I've had the pleasure working closely with over the past year. His significant technical capability and vast operating experience will be invaluable as Boss continues to ramp up production. I look very much forward to working and supporting with Matt in my new role as non-executive director of the company and supporting our board, which has also recently been bolstered by the appointment of 2 highly experienced directors, Miss Joanne Palmer and Miss Carolyn Keats. It really has been an honour steering Boss on the path from project development to production, working with so many skilled and talented Australians and supportive stakeholders and shareholders in collectively making Honeymoon Australia's only new operating uranium mine in Australia in the past 10 years. Thank you.